As a beginner investor, I'm sure you've got loads of questions swirling around in your head. Like, how much money do I need each month to invest? Should I invest in individual stocks? What are dividends? Why should I be interested in them? What sort of account should I have? What's a stocks and shares ISA? What's a SIPP? And there's probably loads of other questions you might have. I know I did when I started 15 years ago. So how did I go from knowing absolutely nothing about stocks and shares to now having a six-figure portfolio, multiple six-figure, that last month paid me over £1,000 in passive dividend income without really doing anything? Welcome to Destination Wealth. Let's get into it. In this video, I'm going to give you a bit of a backstory. Going back to 2014, when I knew absolutely nothing about stocks and shares, and I was just paying into a company pension. This is not personal advice, it's just my own story, backstory if you like, to let you know exactly how I did it. Let's roll back 20 years or so. At the age of about 29, I had a regular job and I was paying the bare minimum into a company pension scheme. By the end of 2005, I had just under £3,000 in pension savings. Humble beginnings. I had no idea what they were being invested in. All I knew was that it was automatic and I paid a minimum of about 15% of my salary that came out before my paycheck into I think what was called a stakeholder pension at the time. What I did like about it is I didn't have to think about it. It was just automatic. I never saw the money first. It just came out before it hit my bank account. One thing I did do is increase those payments every year whenever I got a pay rise or a bonus. It was probably in about 2008 that I actually got a bit more interested in stocks and shares from the financial crisis. It was plastered all over the news, so you couldn't really avoid it. I started reading a few books on stocks and shares and looking on the internet, and I opened up a share account with the Share Centre, and I started putting some excess cash into that so I could play about buying stocks and shares. So by the end of 2008, my stock account, which was just a standard shares account, was a whopping £626, and my pension was then up to £7,000. A year later, in 2009, my stock account was up to £1,800, and my company pension was up to £10,500. I soon then realised that I should have actually opened up a stocks and shares ISA rather than a share account for the tax reasons, which I'll get into a bit later on. April 2010, and we're up to 3,113 in the stock account, and I was paying in about £150 a month. I opened up a new stocks and shares ISA with the Share Centre, and I stopped paying money into the share account and transferred any extra cash that I had into the stocks and shares ISA instead. April 2010, and I now had £3,113 in the share account, and I was paying £150 into the stocks and shares ISA instead. That was now up to £1,500. At this point, I was really getting into learning about stocks and shares and investing. I was watching Wall Street films and documentaries on YouTube, reading books, loads of books, as many as I could get my hand on. I was really loving it. I still didn't really know what I was doing, but some of the books really helped. And in later videos, I'll go on to those and let you know which ones I think's well worth getting and having a good read before you delve into this. By 2011, the share account was now up to 4,398, and the stocks and shares ISA was up to 3,723. And my friend's provident pension was up to 24,715. The problem with the friend's provident pension was that it was really restrictive as to what financial instruments you could invest in. There weren't many funds, there weren't any ETFs. So I started to look elsewhere to see what I could do about that. It was at this point I learned about SIPPs, self-invested personal pensions. all the info I'd read on these basically said it's not worth looking at them because of the fees until you have around £20,000 to transfer into them, which I did have in my friend's Provident pension account. So I went to Hargreaves Lansdown, looked at what they had to offer, and I transferred that directly into a Hargreaves Lansdown SIPP, so I could run the pension myself, invest in whatever I wanted to invest in. So roll on to 2013, and at this point I still had the share account with the Share Centre. I also had a Stocks and Shares ISA with the Share Centre. I had the Hargreaves Lansdown SIPP, which I transferred my friend's Provident pension into. And the company I now work for had its own pension scheme, so I just set that up as well. Now, the company pension scheme was a no-brainer to set up, really, because they matched whatever I put in, which was free money. So it was a little restrictive as to what funds you could invest in, so I just put the bare minimum that the company would match into it. I then also started selling off the shares that I had in the share account with the Share Centre, so I could transfer that money into the Stocks and Shares ISA instead for the tax advantages. So we're now at 2014, and the accounts I had in 2014 are exactly the same as I now have 10 years on. The stock account with the Share Centre I have closed down and transferred everything into the Stocks and Shares ISA. I have the Hargreaves Lansdown SIPP, and I have my company pension as well. So my company pension with Royal London was sitting at £6,084. My Stocks and Shares ISA with the Share Centre sat at £11,469, and my SIPP with Hargreaves Lansdown sat at £36,586. So my combined total investments across the three accounts in 2014 sat at £54,517 at the age of 40. Now at this point is when it starts to get a bit more interesting. In upcoming videos I'll show you how I went from £54,000 in 2014, 10 years on to now, where the combined three accounts portfolios stand at over 300,000, and the dividends that I receive in my SIPP and my Stocks and Shares ISA in February, paid me over £1,000. £1,000, which I pretty much didn't have to do anything to get proper passive income. Thanks for watching. Please leave a comment below on anything you might want me to talk about. Subscribe if you want to know how I went from 54,000 up to what I'm at today. And in the next few videos, I'll document exactly what I was earning in dividends around that time 10 years ago and how it's progressed each year after that. See you soon.